Hello, we are still in chapter 25 for managerial accounting. We're going to talk about special pricing, which is part of the short-term business decisions. Now, what does special pricing mean? It means when you receive a special order to sell a certain amount of units at a reduced sales price. Okay, it should be within your capacity. So let's read this example to make it more clear. Centric sail makers manufacture sails for sailboats. Okay, so we manufacture sails for sailboats. The company has the capacity to produce 35,000 sails per year. So this is my full capacity. I can produce up to 35,000 sails per year and is currently producing and selling 25,000 sails. Okay, so my capacity is to produce 35,000 units per year. Okay, I'm currently producing only 25,000. So what's my free capacity? What's my free capacity? I can produce 10,000 units more. Okay, so I'm gonna receive a special order, okay, and it should be less than the 10,000 units. So I'm going to be able to do it. Okay. Now, the following information relates to current production, which means to 25,000 units. Sales price per unit is 175. A variable cost, we have 2 per unit. Manufacturing and marketing and admin. And we have total fixed costs, again we have 2. 700,000 and 300,000. Okay, so usually you need to find the variable cost per unit and the total fixed cost because these are constant within relevant range. Okay, if a special sales order is accepted for 5,500 units at a price 150 per unit. Okay, so as you can see, the order or the special order is to make 5,500 units and the sales price or the offer price will be 150, but I'm selling this product for my current customers at 175. Okay, so as you can see, the offer price will always be lower than the current sales price. Okay, we cannot accept or reject this order based on the sales price. Now, first we need to think about the free capacity. Okay, I can produce up to 10,000 units. The order is asking for only 5,500 units. So it's within my free capacity, so I can do it for the capacity. The sales price, again, will always be lower than my current sales price. Now we need to think about something else. Okay, I need to think about this 150 should cover or should exceed the incremental cost. يعني, if I accept this order or this special order, I'm gonna pay extra cost. Okay, usually it's gonna be the variable cost because the fixed cost you are already paying them for the current production, so mainly it's not gonna increase unless he mentioned that it's gonna increase. Okay, so what did he say here? If the order requires both variable manufacturing and variable marketing and administrative costs. So he's gonna talk about these two: variable manufacturing and variable marketing and admin. So I'm gonna need these two if I want to make this order. What else? He said incremental, which means additional fixed cost of 400,000. So I'm gonna increase fixed cost by 400,000. Okay, so based on what you're gonna decide to accept or reject this special order. Okay, now my sales will go up, my revenues will go up because I'm gonna sell more units. I'm gonna sell 5,500 units at 150 each, so my revenues will go up. Also my cost will go up because I'm gonna produce more units. Okay, I'm gonna produce more units. I'm gonna produce 5,500 units more, so it's gonna cost me. It's gonna cost me what? It's gonna cost me variable manufacturing, which is 60 per unit, variable marketing and admin, which is 20 per unit, and also I'm gonna pay extra fixed cost $400,000. So what will be the impact on operating income if I accept this offer or this special order? What's gonna be the effect or the impact on operating income? Let's see. Now I need to prepare something called incremental analysis. So my sales will go up, or my revenues will go up by how much? By 5,500 units multiplied by the $150, which is 825,000. Okay, also my cost will go up. Okay, I'm gonna have variable manufacturing, which gonna be $60 here, this one, $60 per unit. Again, I'm gonna make 5,500 units, so this one multiplied by $60. So it's gonna be 330,000. Also, I'm gonna have more variable marketing and admin. $20 per unit. So 5,500 units times 20. So it's gonna be 110,000. And also fixed cost will increase by 400,000. He said incremental fixed cost by 400,000, so it's gonna increase by 400,000. So what's the total increase in costs? 330, 110, and 400. So the total is 840. Now, does your increase in revenues exceeds your increase in costs? Does the 825 exceed 840,000? No. So what's gonna be the effect on your income? Sales, or the increase in sales, less the increase in costs. This is the effect on your operating income. Will you get a positive or a negative answer? 825 less 840. It's gonna be negative 15,000. Negative 15. So your operating income will decrease, will not increase. It's negative. So if you get a negative answer, you need to reject this offer. So the decision here will be to reject this special order. But if you get a positive answer, so your income will go up if you accept this offer, you're gonna accept it. So accept special pricing order if the expected increase in sales or revenues exceeds the expected increase in variable and fixed cost. You're gonna accept. And if the expected increase in revenues is less than the increase in variable and fixed costs, you're gonna reject the special pricing order. Thank you for watching. If you have any question, please leave a comment. Please like, share, and subscribe.